Welcome to TheoTrade. This is Don Kaufman. April 6th, 2022, seconds after the cash close here on this Wednesday afternoon. FOMC minutes are out. You got 95 billion reasons to sell this marketplace. What I'm referencing in this case is the fact that the Fed ultimately in those minutes discussed extensively the runoff of their balance sheet to the amount, well, of about $95 billion a month. For those of you that speak Fed, it's quite considerable, given the fact that in times of what we termed quantitative easing, all right, we were actually adding about 80 billion a month. But the real kicker here, so again, 80 billion a month, but now they're going to look at running off 95 billion a month. The real kicker was that after the program is up and running and they're actually diminishing the balance sheet, which again references quantitative tightening. Of course, you have the old adage of don't fight the Fed. That's why I'm talking about 95 billion reasons, okay, to sell this marketplace. The real kicker in the entire minutes after they get the program up and running, they're actually going to consider not allowing runoff of the balance sheet, but specifically selling mortgage-backed securities, which is a shocker in that particular market. So imagine the Fed coming out and saying, I'm a seller. Like, who wants to take the other side of that marketplace? So again, looking at this after reading through some of the minutes, I have to tell you, and it's few and far between that this actually occurs. Pretty shocked that the S&Ps are taking it so well. I mean, so the S&Ps are down 1%. But when you start to look at the specifics of what is taking a hit on this, so what are we really referencing? Runoff of the balance sheet. It's not going to necessarily be easy money. You take a look at the financials. The financials look kind of meager day, but the financials have actually taken a hit. It's almost like the financials saw this coming. In fact, you could probably make that argument. The financials come down fairly hard. So what took the big hits? The big hits, now you got to look at the monsters of tech. How big of a hit did some of the monsters of tech take? If you look at Microsoft, and again, one of the things I want to point out in this evening's video, it's again, what products are going to have the most influence, okay, from this, okay, again, runoff of the balance sheet, like what is going to see the most volatility. And it's entirely transparent, all right, in today's marketplace. I mean, again, we're looking at Microsoft on a percentage basis. It got hammered. I mean, it's not too often that you look at a Microsoft and see a 3.5% move when the S&Ps are only down 1%. Think about that for a second. It's not too often that you see an advanced decline line. It's almost a 50-50 advanced decline line. Now, okay, I'm going to go ahead, and before I even get to some of the other products that are being impacted, I'm going to tell you right now, okay, I am rather concerned, if you will, all right, about the AD line in this particular situation, okay? Why such a cause for concern? Oh, the simple fact of you can have a marketplace down by the tune of 1% or the Nasdaq off by 2%, and the advanced decline line in the S&P 100, that is not half bad. The next on the menu, let's go ahead and look at, well, Tesla. Now, Tesla has had an incredible, dramatic run-up. Okay, you can actually go ahead and say, like, most of this rally in the S&Ps in the last 3 weeks, well, it's been a handful of stocks. Tesla, of course, is one of them. Take a look at Tesla hitting the lower edge of the expected move. We look at NVIDIA, okay? NVIDIA getting absolutely smoked in today's trading session. I mean, listen, these underlyings are the power that be. And the reason that I'm bringing them to your attention, if you're looking at markets and you kind of gather like, all right, we've had this, again, kind of quintessential, what we term rip your face off rally in the marketplace. Now we're coming back down. But are we about to drop back into what could be, if you will, like a hideous bear market? There's no question. Right here, right now, this is the key inflection point. Okay. And when I see that key inflection point, I'm like, listen, any further sell side activity, and it's over. We are then headed into an absolutely hideous bear. The days to come, and when I say the days to come, I mean, I'm literally like Thursday, Friday, Monday, Tuesday of next week. It is on. It is on. It is right now, right here. You are at that critical kind of juncture again in the marketplace. The things that you really want to focus on. There's a reason I brought advanced decline line up a moment ago, okay? And that's simply to say, if you want to know if we're actually heading back into the hideous bear, okay, watch AD line. If we actually start to see degrees of correlation again, it's on. All right. And when I say degrees of correlation, you got 10 up, for instance, 90 down. Okay. That's degrees of correlation. Again, overall, in today's trading session, I've said this several times already. I'd be remiss not to mention it again. Like how the market took the news out of the Fed like a champ. But I fear, all right, based on like volatility, based on bonds, we're leaning right now, right towards, again, that hideous sell side activity, okay, kind of regenerating and spiraling out of control, which I'll talk about. There's a lot of risk metrics that I tend to look at, one of which is the dollar. You wouldn't have anticipated all of a sudden they start contracting the balance sheet, the dollar is flying. If you look at the dollar like I do, kind of like the new VIX, this doesn't paint a pretty picture. If you take a look at like VIX doesn't say that much. It spiked and retracted. But I will say the volatility futures themselves, and I like to pull up volatility futures, look at, and again, this is some serious geek stuff that I'm kind of getting into, but look at, for example, May versus June. And the differential between May versus June, it's really, really tightened up. So if you want to know, again, if we're about to get, just downright wild in this marketplace, look for correlation in the S&P 500, right? Or more specifically, I tend to use the S&P 100, okay? Look for all of a sudden the volatility futures, which are in a contango, look for them to possibly jump back to flat or even a backwardation. A backwardation is where May will jump over the June, right? They're tighter than I would have expected. And why am I bringing this up? Bringing it up because quite frankly, right, I didn't expect the volatility futures to react at all. You've had 2 days of sell side activity, 36 hours ago, we're like, everything is fine. We're fine. And that was 36 hours ago. All of a sudden you fast forward and you're like, hey, wait a second. Vol futures are back to like, flipping over, right? You got the dollar that's actually breaking out to the upside. We've been anticipating that for the longest time. You got the advanced decline line as a 50-50, and you got to realize, and in my estimation, there's 46 other things that you can sell in a day like this. Read through it. You start looking at things like VVIX. This one's interesting because it actually reverted back down. You're like, no, nothing to see here. Like the market, okay, today, again, as I said, it took the news in stride. Obviously, everybody's paying attention to the bond market. The bonds broke, substantially. The notes actually broke substantially. But again, taking everything in stride. Last, but definitely not least, probably one of the reasons that I'm so critical about the next 24 to 48 hours all comes down to expected move. When, I'm talking about this critical juncture in the marketplace and, how, like, listen, the next day or two is going to make a big difference. It has everything to do with right here in the expected move. Allow me to explain. The expected move, again, the expected move for the entire week sat at about $74.83. Now, that's the SPX expected move. That's based, okay, on last Friday's closing prices. It's the forward future, like it's just looking at, hey, what's next Friday's expiration? And it says about $74, $75. But where are we? The entire trading day today came down to the lower edge of the expected move. This is something that I talked about in the first hour that I was on here at TheoTrade. First hour this morning, I said the whole day is going to come down to skirting the edge. In the SPX, roughly, okay, it's the 44.70 handle. Where do we close? 44.80, slightly above it. why it's such a critical juncture for the markets in the next 24 to 48 hours of trade. If we lose the edge of the expected move, it is very much on. You have to realize that it's not going to benefit you, all right, to try to bear up right at the edge of the expected move. It's not to your benefit to try to sell options premium just because we've had, if you will, 2 days of sell side activity. I think this one, you don't sit on the sideline. You watch very carefully. If we start to come off below 44.70 though in the SPX, what's going to happen is all of the market making side of the business, everybody that's too big to fail, they're going to have to sell into the selling. Why? It's called bona fide hedging activity, people. And bona fide hedging activity, they just trade with the dynamic of the marketplace. And what would occur in this is that the dealer gamma, and people have possibly heard that term, dealer gammas are going to flip over on them on a really, really big way. If you look at the dealer gamma, the seam in that gamma being basically 44.70, anything below it would actually force trading firms to have to sell into the selling. Again, really pivotal area, right on the cusp, if you will, of rushing right back in to an extraordinarily bearish market. I, for one, hey, listen, take what the defense gives you. I'll love the volatility. Nevertheless, be warned over here. If we're going to head back down, volatility will rage in the days to come. This is a time to actually think about it, allocate slowly, allocate efficiently, watch volatility very, very closely in the near term. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful afternoon. Bye-bye.